starting a brand new week, last trading day of a quarter, last trading day of the month, and the week gone by really has been an eventful one, Aisha, largely because there's nothing new in terms of the war front. There's nothing new in terms of anything new from Donald Trump.
Yeah.
There's nothing new which came on the local front. Flows were strong. India underperformed the globe, but in general, I guess if you look at the mood, the tone and the tonality of the market, last week in a sense was like a smooth one for Indian markets.
Oh yeah, absolutely. I mean, the fact that 25,000 turned out to be such a stiff hurdle for the index, and the fact that we're now scaled up all the way to the 25,750 level and just a whisker away from that all-time peak, that itself is, a telling sign. And not just that, I mean, it's not just us, it's across the global markets, the kind of surge that you're seeing. Most markets are now sitting either at their all-time peaks or just shy of that.
Yeah, and which is, I guess, the talking point, Aisha. I mean, think about it, where the markets were in the month of April. I'm talking about global markets, especially US markets. And they've managed to crawl back and they've managed to really close at impressive levels. So last week, the headline for me was more global in nature. Geopolitical concerns have faded away. Markets are looking strong. Things incrementally are looking up. And you have to say that somewhere the market action may not be that robust in terms of what the Nifty actually has done. But boy, oh boy, in terms of the market levels, in terms of the mood point, in terms of where the mid-cap stocks they stand, I think everything is looking decent. So Aisha, the moving point for me, or the talking point for me this week actually is just one important angle which I think which we should not ignore is the movement in the dollar index. The speed at which the dollar index has fallen, just went from 101 to 106, 107 and back below and way below 100 now, I guess is the most important trade here. So will this selling in the dollar index continue? Or if the comeback in the dollar index somewhere will happen later this week? If that is the story, then for me the biggest moving part this week actually would be the dollar index, which will have impact on flows, gold and everything else. So rather than talking about crude this week, I guess it's the dollar index which in a sense would be the most important moving factor going forward.
Oh yeah, that said, even the cues from the global markets have been quite handsome. Look at the handover that you got from Wall Street on Friday. Excellent move coming in there, both from the S&P as well as the Nasdaq, which did finish off at record highs for them themselves. So extremely strong is how the US equity markets at least panned out on Friday, and now they've notched yet another fresh high, at least for the S&P 500 index. It's a fabulous move that you had across indexes there. Whether Asia is not catching up or not, well, Japan surely is. It's currently sitting at a near about 700-point move. That's the Japanese Nikkei for you. Investors are now kind of awaiting a slew of data points from the Asia countries, marginally higher for the periphery markets as well. Australia is up in the green, about 0.3%. Shanghai as well is trading with a positive bias. Hong Kong, though, is down about almost 0.5% as we speak. So where is the GIFT Nifty right now? Is that also indicating a fair amount of cheer, as is the case with Japan or US equities? The GIFT Nifty currently flat but with a positive bias and inching up and holding on to those levels from Friday at 25,767 in trade. But yeah, the fact that we underperformed a tad bit as opposed to our global peers, but standalone, we're not doing bad at all. I mean, the Nifty 50 in the week gone by managed to eke out a gain of about 2%. That by no mean feat is anything lesser. The small caps, look at the kind of flurry of activity that you had there. Over a 4% gain coming in for the small cap index. And it's just remarkable how some of those metal, energy, PSBs, those indexes and sectors performed.
So Aisha, you've gone past an important level. This level in a sense really has been this eyesore for the bulls for a long period of time, almost for 30 days now, 25,200. You've closed above that in a very impressive and a meaningful manner, but there is no thunder around it. And when there is no thunder around this, it clearly means that the market are giving you two signals. One, that the path of least direction is up, but in that context, it's not the Nifty which really is the showstopper. It's the small and individual stocks which in a sense would be defining and redefining which way the price action this week would move. I think next week or so, markets would automatically move into that earnings season mode. Auto dispatch numbers would be coming out today. So from a market construct standpoint, there's nothing large which you really need to look forward to. So the excitement in the market is not there, but yeah, the attempt really is that you stay long and you stay with the market. I don't think we are there yet in terms of what would be called as a Humpty Dumpty level. This is not a market where you want to sell, but you certainly want to be with the market, and you may just want to say that, okay, I would be very focused in terms of the stocks and the themes, because while Nifty is crawling up, the sectoral rotation I think is beautifully on the list of 52-week high. Metals you mentioned, energy you mentioned. So there is a lot of sectoral rotation which clearly seems to be, which clearly is there. So you like the market, but there is no excitement. There is no thunder. There is no rah-rah feeling of getting left out. But the path of least direction is that if you stay with this market, it has been a rewarding experience, and I think it will stay like this. Let's see how we negotiate the earnings. I don't expect earnings would be that great because hardly anything has changed in the quarter gone by. So that really becomes a litmus test, that how do we negotiate the earnings, because earnings are not strong. I mean, that's a grain of truth here.
And
actually,
also refrain from the temptation of that, giving into that FOMO feeling right now, because you're seeing the index is just 2% away from their all-time peak. This is not the time to buy afresh.
You can't chase stocks. You can't chase stocks at these levels. You just have to be with the market. It's just one of the strange markets where if you are invested, stay invested. If you have long positions, stay long positions. Don't directionally change the market per se. And I'll tell you why, because when the breakout happened on Thursday, I was personally of the view that the breakout will create a lot of thunder, and both on Thursday and Friday that was missing despite the F&O expiry. So the ingredients are there for everyone to see. Global markets all-time high, Bitcoin all-time high, crude prices have come down, dollar index is weak, FI buying is robust, but yet the underlying market is not really giving you this push factor. So nothing wrong with the setup, I'm not complaining, but with this kind of a setup, I was hoping for a more charged up price action rather than a lukewarm kind of a market setup.
Yeah, absolutely. Okay, lots to talk about.